Let's send it over to CommSec, and Tom Piotrowski joins us. Tom's about to have 4 days off, as will investors right around the country. So how are we going to go today on this last day before a break, Tom?
Pete, it's an excellent question, and we'll at least kick off in positive territory. So the futures are telling us we'll be up by around 0.4%, adding to yesterday's gain of 0.5%. So the thing that stands out, Pete, is that we've probably lagged a little bit in monthly terms. The index, if you were to rule a line under it now, is up 1.6%. In quarterly terms, up by around 3%. So very much a workman-like effort when you can compare it to some of the breathtaking improvements that we have seen for Northern Hemisphere markets in particular. So, we've got the S&P 500 and the Nasdaq each up in the order of 9% in quarterly terms. So, if the thing that stands out about that statistic is that if you have to go back to the 50s to see near double-digit improvements, or as back as far as the 50s, you've only seen a handful of gains of that order back-to-back in terms of double-digit quarterly outcomes. So the combination of rate cuts, improved economic outcomes, earnings, all of those have contributed to the very strong gains that we've seen over the course of the first 3 months of the year. As we speak right now, though, in the US trade, the gains are pretty modest. We've got the Dow Jones up by around 0.8%, not a bad outcome, but the S&P 500 up 0.4%, and the Nasdaq up by around 0.2%. So the interesting point to make, Pete, is tomorrow, which is Good Friday, of course, in the US, they will release one of the most important statistics of the month, but the markets will be closed. So Monday is when the US markets will reopen, and that'll make for a very interesting session.
Okay, no doubt. Tom, thank you.